morning, everybody. Good afternoon to my friends on the East Coast. I am Mark Sebastian. I am your only option, and I am joined by one princess of product development. All right, the amazing customer advocate that is Hannah J. Seller. Hannah is here to be your advocate today because I'm sure you've got a lot of questions, and we want to make sure that you understand everything that we're breaking down today, because today may be the most important trading day of the year. And I'm going to lay out why here in just a little bit. But before I do that, let me swing it over to Hannah, and she's going to guide us. She's going to lay out all the important stuff that we're going to hit on and talk a little bit about what we've been doing here at Option Pit. So, Hannah.
Hello, everyone. Good morning. I guess it's afternoon now. Good afternoon.
Well, it's afternoon on the East Coast.
Sure. Yes, correct. Mark is very time zone vigilant, which we love about him.
Well, it's because people on the East Coast can't do time zones. I remember when I was working in Chicago, I'd be talking to someone in New York, and they'd be like, "What time is it there? Is it like midnight?" And I'd be like, "I'm an hour behind you."
Honestly, no matter what time it is, it's trading time. So
Yes.
I am very happy to be here today. Thank you for letting me join you for Delta Strike. Mark and I have some exciting things to show you today, including a long-term big money flow trade that Mark is going to look to put together today. So as you guys have seen, I'm sure this morning, we broke through that 5404 level that we identified yesterday as support. And we went almost all the way down to the 5100 level, which we also talked about yesterday. So Mark is going to go over that in just a few minutes, and he's going to walk through markets right now, what the heck's going on, how this changes or doesn't change what we're doing with big money flow. It actually can make big money flow trading very exciting. There's a huge opportunity that over the next week is going to unfold. We're going to talk about that here today. But I wanted to start off, like Mark said, if you guys don't know me, I'm the director of product development here at Option Pit. I've worked with Mark for probably about 5 years, but more full-time in the last year, helping build products. And last night, I got an email that is one of the reasons why I love working at Option Pit and why all of you here today should be very happy that you have access to people that are paying attention to the market. And let me show you what I mean by that. So I'm going to share something with you. This is an actual email that I got last night. Let me pull this up on my screen so you can see this. I bet a lot of you have an email that looks similar to this in your inbox. This is from my financial advisor. Now, a lot of people use financial advisors. That's very normal. We all here at Option Pit advocate for long-term investment opportunities. That should be a part of what you do, buying and holding stocks, buying and holding ETFs. But in light of what has happened over the last 24 hours, to receive an email like this last night, it was upsetting in the least. I highlighted here for you the two sections that are kind of the worst. But basically their messaging to me was that we should wait and see. And it actually says this, I'll zoom in on this a little bit. It says, we are apt to take more of a wait and see approach. Now, they're not wrong. Like, yeah, I will wait and see. But imagine if I was about to retire, like in the next 6 months or in the next year. Imagine how I would feel. And some of you may be in this position. Imagine how I would feel looking at my long-term portfolio, which is down basically a small car this morning, a new car. That's a really painful experience. And when that's happening, to have the people that are supposed to be taking care of my money are supposed to care about it as much as I do, to have this be the information that they sent me, I was mad. And I have a couple other, like we talked about this morning at our phone call at Option Pit. A couple other people shared that they got similar letters from their financial advisors. We are so glad that you guys are here because you have to understand that for them, you are just one name on a list of names. That's just the truth.
Yep.
So if you want to really take care of your money, which you're already taking a huge step towards doing that by being here today. So thank you for coming. Good for you. You're in the right spot. But
Yeah.
there's more that you can do to take care of your money, and we're here to teach you that. So I paired with this something else I'm going to show you right now.
Okay.
This is a list of all of the wins here at Option Pit we closed over the last 2 days. So while my financial advisor was writing, probably with AI, to be honest, this perfectly crafted, cute update that tells me to wait and see, here's what we were actually doing. And I know a lot of you that are Option Pit members can relate to this, and you have seen the way that we are able to trade and continue to make money when the market behaves this way. I know there's a lot of you out there. I've gotten some emails from you in the last couple of days that say, thank you for what you're doing. I'm green on the day. Everything else is red. So I wanted to show you guys this and set up some context for why sessions like today, why we do this, and why this is so important. Because personally, and I'll be selfish for a minute, personally, I am glad that I participate in our trading products and have made some of these same positions and moves over the last few days. It makes me feel better about what's happening with my long-term portfolio. So I wanted to show you guys this. I know that some of you, even if you're just looking at your long-term portfolio, can relate to this. It's not a good feeling. So, Mark, what can we do about it? What do we do differently here at Option Pit? Let's start with the market itself. So yesterday we broke all the way through 5404, which was the level that we said was significant, and we ran lower this morning. If you want to pull up like SPX or SPY,
let's share my screen. I want to show you that, and we got these levels in. I talk to Alicia every day about where our S&P levels are. We're a team here at Option Pit. Just like when I was working at my different trading firms, traders rely on each other. So I work closely with Alicia, closely with Andrew. And so because can I break down a chart? Yes. Am I Alicia Leslie? I am not. And so I go to the expert. And I want to point out the low from this morning where it looked like we had some forced liquidations. I was talking to a couple of hedge fund guys that I talk to regularly. It's a couple of my old friends from the floor that are running some decent dough. And they said it smelled like liquidations this morning.
Yeah.
All right. And where did those liquidations stop? The low for the day on the S&P 500 is 5,118.78.
Yep.
Alicia said, watch that August 5th low. The low for August 5th, 5,119.26. The low was 40 cents through her target on a $51,000 or $5,100 product.
You know who can't do that? And you know who's not going to do that for you? Your financial advisor.
No. Hannah, I like to tell this story. So at one point in time, I was the head of investments for a mutual fund that was running. We were running about $1.5 billion bucks. I went into a conference for one of the asset management groups that would use our stuff.
Uh-huh.
And we were by far the largest holding of all the asset managers there. And it was a 2-day conference. They gave me 15 minutes to speak. Everything else was about how to sell better.
Right.
That is what your financial advisor knows, just enough about finance and then how to sell and make you feel good.
Right.
Except for when things don't go right. And that letter was about as tone deaf a letter as I've ever seen in my life.
Yeah. It was basically like my dog died yesterday, and they're like, sorry, your dog died. Here's the weather forecast for today. I'm like, what? What?
Yeah.
So over the last 2 days, we've been actually showing you guys what's happening in the market and actually telling you where we think the opportunities are and trading them together.
Absolutely.
A lot of you were here on Wednesday and got the overnight trade on Gap that won 342%. That was based off of big money flow, which if you're new to Delta Strike and this is your first time maybe trading live with Mark or being here, he focuses on the biggest money in the market and where it moves. We can actually piggyback on those moves. And Mark does it so smartly where he makes a little bit of a better trade so that we actually can capture more upside than the hedge funds, big banks, etc., that are throwing around their weight on stock plays. So we basically can kind of see what they're doing, and we use that information to make a really smart trade. And Mark, you and I were talking yesterday, and you said that, and you just mentioned this a little when you were talking about the levels in the market. You said that there's some liquidating happening. Can you explain to everyone here today what that means, and especially what that means for us as traders that want to follow big money flow? Because there's a huge opportunity that's going to present itself like maybe today and next week.
Yeah, sure. Let me show you what that would look like. So I'm running I'm a big asset manager, right? Or I'm a medium-sized asset manager, or I'm a trading firm. I get myself over leveraged, right? Because trading was easy all the way until February, and I sold a lot of options that I shouldn't have. I didn't manage my risk right. And the clearing firm says to me, "Hey, Mark, you need to put $12 million in your account today, or we're selling what you own." So that is called a forced liquidation, and nobody drops the 12 million, folks.
Right.
Nobody does that. So they say, I'll just liquidate it.
So big money is put in these positions where they have to generate cash quickly. And
yes.
So when you see what Mark's saying is, when you see a huge down day like the very beginning of today, that is them liquidating their positions to take some of that money to cash, which is important. But the most important part is what comes next, Mark, which is,
where do we move from here? And where's all the opportunity that we see from these guys, and kind of sneakily what they're doing under the surface.
Right. So all the money that they just collected, that they just took off the table, that is now sitting in their account, they're going to deploy that. That is going to go into stocks, into options. And the way that Mark tracks big money flow, we can follow that money. So I see Shane in the chat. He says, follow the money. That's what we do in Delta Strike. We follow the money. And Mark, in just a minute here, he'll show you exactly how we do that. He uses Live Vol, which is what you're seeing right now. If you've never seen this charting service before, this is called Live Vol. We love this here at Option Pit because it does a lot of great stats and data on options, which we're going to show you. So Mark, let's kind of sum up the market today, where you think things are going, and then we can look at some big money flow.
So you can kind of see when the forced liquidations happen, because the S&P over the course of just a minute, a couple minutes, drops, almost 100 points. And then we immediately get a pop right back to where we were. This just boom, 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 and then boom, 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 we're right back. That is a forced liquidation. And those smaller firms, you know who they're selling to on those forced liquidations? Goldman Sachs, JP Morgan, Citadel. Those firms are just salivating at these levels right now. And, one of the reasons why we have to be, a lot of people like, well, hey, Hannah, or hey, Mark, why didn't you put out a trade yesterday?
Yeah.
And what happened today is exactly why.
Right.
I felt good about it, but I didn't feel 100% good about it. And 90% good, 85% good is not enough. Felt 100% about that gap trade. This one, not as much. And if I had done it yesterday, I would have been talking to a bunch of people about how to manage a 50 to 80% loser.
Yep. One of the benefits of working with a group like Option Pit is, like, we're active traders ourselves. Mark and Andrew and Leisha, we're real money traders. They are actually trading the things that we alert. So our own money's on the line. We're never going to force a trade if it's not lining up. But if we have an opportunity that lines up today, and Mark, you think we may have a longer term big money flow opportunity today, then that's a trade we're going to tell you about. So a great question that was just asked in the chat, and I have the same question, Mark, is B. Dreyer asked, these forced liquidations, so what happened today? and all that money coming out of the market. He wants to know how long that will last for.
I mean, we're probably done for today.
Okay.
And,
What
it
tells
looked
you
like
that?
we
Why
were
do you think that for today?
because we got that big push.
Okay.
In order to get kind of a secondary force liquidation, we would need to see a clean break of those August lows.
Okay, which is what's
And
the level for that, just for everyone
yeah,
here
we're
today?
watching 51.19.
Okay.
So kind of the very bottom of the day. So if
Yep.
we start breaking the lows of the day again, then you're going to start seeing some more money come out. I would
Right.
say 5,000 would be kind of a watershed moment to look out for
Okay.
on the S&P.
Okay.
We get down there, and which is, less than half of how much, basically about half of what we've moved today.
Yeah.
So just, call it 2% lower.
So for you
And
guys out there looking
we'd
for
be there.
levels, 51.19 is our next significant level. If we go under that, I would say be drier. That's when we're actually seeing some more forced liquidations happening. And then anything below 5,000 would be like, okay, you should not touch your keyboard for a minute. Let's wait and see how things settle.
Yeah, and you'd want to settle below there on a 5-minute candle, not just a trade below there. You want to see it actually forced lower and staying there.
Yep.
That's
Okay.
very important, because we technically touched there, but then we bounced right off of it. And I don't want anybody to get whipsawed into that. So that is what you need to be careful of here. All right. So talking about the market, the level on the upside to watch. And you're saying, Mark, what if we turn around? What if things do start? What if we get an afternoon rip? We got a big bounce off the news that Vietnam and Cambodia are actually going to lower their tariffs and negotiate directly with the Trump administration to get those down. You saw Nike get a pop. Retail's now green on the day. I believe it may not be anymore, but when I looked 15 minutes ago, it was. All right, retail's basically unchanged on the day. It's been up. Nike got a nice pop out of it. If you're wondering where the bottom was, maybe today. And that is, so we could see things this afternoon, because morning sessions and afternoon sessions have been so different.
Yeah.
Basically since the beginning of March, right? Where we open and where we close, it's like they're not even talking to each other.
Right.
Typically in a market, most of the moves happen overnight, and then during the day, not a lot happens, or that move continues. We've been seeing big moves overnight and then move the other way,
Right.
and then, or vice versa. So the level I'm watching on the downside, 51.19. On the upside, the key level is 52.50. If we get above 52.50, that is an opportunity to buy a cheap out of the money call.
Yep.
And look for the market to potentially rip.
Let's talk about how this affects big money flow, Mark. So,
Yes.
the focus of using Delta Strike and making these trades is following the money. We know from what we just outlined for you guys that a bunch of money came out of the market in these liquidations. So they're going to be ready to deploy this money in new places, which you should be sitting here like a kid in the candy store, because Mark and I did some math yesterday, and it's like 15 or 13 billion dollars that came out that's going to go back in. It doesn't sit there. They're not putting it under a mattress at Morgan Stanley. Like, it's going back into the market. So when it does that, we can actually follow it. So Mark, for people who are brand new or maybe weren't here the last couple of days, can you just walk them through what they're looking at right here before you get into the flow itself?
Yeah. So this is a big, large block trade scanner. So it's looking for trades that are over 5,000 contracts, 4,000 contracts, a certain generally, it's going to be a certain percentage of the total open interest. What is open interest? That is how many open options. So if I buy a call, I'm opening one contract that would have open interest of 1. Most active options have open interest of 250,000, 500,000, a million, maybe more. So this is looking for trades that are a percentage of the open interest or kind of a minimum level. Typically, we're not going to look at anything less than 2,500 contracts, which is a lot of money.
Right.
So for instance, in XLI, which is the industrial ETF.
Okay.
We have what amounts to a close.
Okay.
All right.
So 69, that first column that says quantity that says 69,000, or sorry, right here. Yeah. 72,000.
72,000. Yeah.
That's the number of contracts, correct?
Yes.
Okay.
So the trade they closed, they owned, it appears they sold the 115 put and bought the 100 put.
Okay.
All right.
So
now,
what Mark does here a little bit, you guys, is he's able to kind of pair, because this can look confusing. If you were just using this scanner, you may not realize that some of these trades actually go together. Because what we're trying to do when we look at this is understand where someone who's placing tens of thousands, hundreds of thousands, maybe even millions of dollars in a singular trade, where they think that stock or that option, where the price could go. That's what we're trying to decode. So a lot of times when Mark looks at this, you may see like, oh, look, here's an XLI put. That must mean they're trading it to the downside. Well, below that, there's actually a bunch of calls also. So Mark's going to pull this up. He'll make it a little bit big.
Yeah,
bigger.
I want everyone to be able to read this. So
this is something that he teaches in Delta Strike. So he'll teach you how to look at these and how to read these.
Okay. Now everyone should be able to read this, Hannah, right? Can you read that?
Yeah, much bigger. Yep.
All right. And what I want you to notice is the time. All right. So folks, I've got my screen that you're looking at is directly to my left. So when you see my arm go like this, I'm pointing at my screen. You can't see it, but I am. I always feel like I'm teaching live. And what we see here is an unwinding of a big, massive order that this trader had on.
Yeah.
The trader sold 72,000 of the 115 puts in XLI. It's trading 121.39 at the time.
Wow.
They bought the 100 puts. Looks like they sold the 116s, sold the 138 calls, bought the 133s. I mean, this is a massive strip. Sold out of the 125s and here for 60, looks like 65,000 times.
Right.
So when you add this up, here's what they're doing. Now that I've gone through the whole thing. The trader was long the 125 puts against, I believe, the 116 puts, and had some other things going along against it. But to kind of wrap things up, because we're not going to be trading off this. This is the industrial ETF. This is an unload of a lot of long options.
Yeah.
All right. Now, do I own options? What is the main purpose of an option? When I sit down with a group of people that really don't have a lot of experience, I ask them, if you could sum up options in one word. And folks that are Delta Strike members, please don't chime in yet. But I'm going to have Hannah pretend to be you guys. All right. Hannah, if you could sum up options in one word, what word would you be? What word would you use? And normally, it's okay to be wrong.
Normally, I use leverage.
Okay. I would use the word insurance.
Okay.
All right. Options on an insurance contract.
Yep.
All right. Originally, the call option was invented because I'm thinking about buying Microsoft. Do I want to buy a 100 call or do I want to spend $100 per share? Well, I'm only paying a little bit insurance to capture the upside, and now I don't lose more than what I paid.
Sure.
All right. It's an insurance contract.
Yep.
So when we see a giant option sale, what is that? What is this trader doing?
It's insurance on a stock trade.
Cashing in its insurance.
Yeah.
Right. Hannah, you were a star soccer player in Tennessee, and you were heavily recruited. You were going to go to the Bundesliga to play. All right. That's how good you are.
Totally.
All right. But what do players do to prevent? What do really good players that are about to be drafted do during their senior year? They buy they buy insurance on their bodies.
Sure. Yeah.
Right.
So if they hurt themselves or whatever. Yeah.
They get paid.
Right.
Think about this. The market was a star soccer player when it was up at 6,200.
Sure.
It just completely ruined its ACL.
Right.
Well, guess what? This XLI holder had insurance and he's getting paid on it.
Right. So this is the liquidation. This is them actually getting paid on the insurance they already owned before any of this happened.
Yes.
Totally. Okay.
Yes.
So knowing that, when we look at this big money flow scanner, we're actually trying to filter through and we're trying to find the money that's going back in, kind of, not the money that's coming out. Got it.
Yes. And when we're down 5% and we see traders with conviction call buys and conviction put buys in this market, then you know they've got a real axe to grind.
Right. Because it's even riskier at this moment. So anything they're actually doing, there's a higher level of conviction. Does that make sense? Did what Mark and I just went through make sense to everyone here? Like going through that XLI trade, throw me a yes in the chat. If you have a question, ask it now. We are here to make sure that you guys understand this and what's happening in the market and the opportunity that is going to start to unfold as the big money that has liquidated their assets like starts to get back into the market. So if you have a question, ask. But right now, what we're going to do is we're starting to look for where the heck is the money going that's going back in. Yeah. So do you see anything interesting on here, Mark, yet? I'll field kind of these questions as they come in.
What is shocking, all right, is this entire, I haven't started scrolling down. All of these are in ETFs and they're all puts and they're all liquidations and adjustments.
Yeah.
The money is cashing in. So like, this is a kind of typical trade you might see. Look, they're selling the 525 put, selling the 540 put, and it looks like they're picking up the 510s and the a little bit of the 510s and the 490s. So they're taking that at the money premium that they made a lot of money on, right? They're selling options that they made that at $15.30 and $23.37. And then they're just they're spending less than the value of the 525 put to put on to kind of readjust their hedge. But they're taking out of this trade approximately $23,000. I mean, wait till you see this number, Hannah. $23.37 times 100 times 46,165 contracts. This on a single trade.
Whoa.
The trader cashed in $108 million.
So when we say big money, we mean big money.
Yeah.
And so Mark, compare this to, because you trade off of big money flow in Delta Strike every single week. You do this every day. You meet with traders live every day from 12 to 1, and you do exactly what we're doing right now. You go through and look at this. How often do you see orders of that size, and what does that mean about the opportunity right now?
I mean, the amount of the only days we really see that many orders of this size are going to be on like a standard third Friday expiration or a quadruple witching, because traders have to roll and adjust positions.
Right.
You typically don't see this kind of premium outflow.
So those are kind of like once a quarter numbers, or like once a month if we're lucky. So, and I would assume, Mark, that what we've laid out, I mean, when that money comes out, we're saying the same thing again and again. I want to make sure everyone gets this. It's going to go back in. It's not in a vault at Morgan Stanley. It's going back into the market. So do you see any of that starting to happen yet today? Do we see any more money going back in, or do we think that's something that might happen on Monday? What's kind of a timeline for something like that?
So the incredible thing is I am look how far I'm scrolling.
Yeah.
And I don't hit a single option, a single individual. All right, we do have an LCID put. Somebody sold 70,000 of the June 2 puts, probably either cashing in a hedge or them putting in a feeler out to try and find a bottom in LCID. That's Lucid Motors. But outside of that, I don't see a single equity until we get to MSTR all the way down here. So
Right.
there's millions and millions of contracts going up in these big ETFs, and it's all traders cashing out, readjusting. So, and you're saying, well, what do you mean by cashing out? I own a $100 stock, and I buy, I'm worried the market's gonna sell off. So I buy a $100 put for $1. The market absolutely collapses, and my put is now worth $25. Well, I've lost $25 in the stock, but I've made $24 on my hedge. So I sell out my hedge. Then I have a decision to make, right? Do I buy a little bit more hedge because I'm worried, or just keep that cash on the sideline and be happy that I'm long the market at that stock at $76?
Right.
Right. Or, and this is the key, I go, oh, the stock's starting to bottom, and I just made $2,400 on my hedge. I'm going to buy more of this stock. And that is what we're waiting on, what we're watching for. And we're getting, in my opinion, pretty darn close based on the price action we're seeing.
Yeah.
I would take note. This does pull in VIX options. And when people are worried, if we were terrified, we would be seeing 100,000 VIX calls.
Right.
50,000 VIX calls.
Right.
25,000. Do you see, tell me when you see a VIX order, Hannah.
Hold on.
Pay close attention. I'll make this bigger so it's easier for you to see. That's as big as I can make it. So nothing yet. Nothing yet. Nothing yet. There we go. So far, the largest order I have seen that we have in a VIX contract is 19,000 contracts. Looks like something around the June 20 calls. It will look, and there's another piece to it.
So a couple people keep calling out in the chat that, like, right now we're at 51.34. Mark's downside, the bottom that he talked about is 51.19. So if we were to go under that, is really where we would be worried. And maybe if we went under that, we would see a gajillion VIX calls come in on this big money flow scanner. But what Mark's saying is right now, he had to go look for where those VIX calls are, because I think people are starting to think it's a bottom.
It's a weird, interesting day. But now we're finally starting to get into some of the individual equities that I like to see. So typically, you're not going to see. It is unusual to see an equity trade the size of this LCID one that is 70,000. Typically, big money flow is going to want to control about 1 million to 2 million shares, which is 10,000 to 20,000 contracts. On less liquid stocks, they're going to be playing in the 5 to 10,000 range, and on the small ones, 2,500 to 5,000.
Getting a couple questions, Mark. People are asking about the colors. There's red, there's green, there's gray. Do those mean anything on this scanner?
They do. They do. Green is a buy. Green means they bought. Red means they sold. Black is mid-market, which means, let's say an option quote was 50 cents. They'd pay 50 cents and they'd sell it at $1. A mid-market trade would be 75 cents. And then the fun ones are the blue ones. That means it traded through the market. So the bid was 50 cents and they traded 45 cents. How do you think that happens, Hannah? I just pulled out my Chicago. How do you think that happens, Hannah?
With all the accents in here between you and Hans, it's hard to keep up.
I know. Well, how do you think that happens?
I don't know. Tell me.
The trade is so big, the market can't handle it.
Okay.
So they've got to, they have to do it through the market to get the whole trade done. So they want to get the whole block done. So they clean up the bid and then put the whole thing up. And that is allowed. That is allowed for large block trades.
Okay.
They're not allowed to do that to you, the retail trader.
Okay.
But
right.
If I'm trying to do 40,000 contracts, it's kind of a different animal than 4.
The more and more we have these conversations, Mark, and for you guys that are here listening today and going through this with us, again, If you have questions about big money flow, what we're walking through, please put them in the chat. I'll pass them to Mark. I'm kind of filtering these as we go. But for those of you that are here today, one of the key things you need to understand is, and Mark, maybe you can talk about this a little bit, the ratio of volume that is retail traders versus big money flow. I think it's easy as a retail trader to keep in your mind or to think like that the retail community is bigger than it is. The amount of volume that moves through the market every day, that is what Mark's looking at, is big money flow, is hedge funds, it's big banks moving money around. It's so much bigger than you realize, that if you're not paying attention to how that money moves, you're missing the biggest piece of the pie, understanding the market every day. Would you say that's correct?
Absolutely. I think retail accounts for about 15% of the overall market.
Right. So that means 85% of the volume that's moving in the market every day it's big money flow.
Yeah. And options are now the dog.
Right.
All right. So let me, again, the bond market, they don't just own the dog, they own the dog store, they own the breeder. They've got, ignore the bond market at your own peril. But when you get into US equities, option markets are dictating what stocks are going to do, not the other way around anymore.
Right. So specifically, when we look at big money flow on this scanner, we're looking at options orders, just to give you guys some context. And it really was, so in 2022, in October was the first time that in a single day there was a higher options volume in the market than stock volume. And virtually every day since then, it has stayed that way. So when Mark says, the options are in the driver's seat, that's what he means. They are the biggest driving force inside the market every day. And the biggest piece of that driving force is this big money flow. So that's why this is a huge piece of what we watch, especially in moments like this, when the big money flow is going to decide, the hedge funds and big banks are basically going to decide where the bottom is.
Yeah.
We see them start to come in, and that's 85% of the people in the market. And we'll be able to see it here. When they start to come back in, they're basically dictating where the bottom is in the market.
Absolutely.
So, Mark, when we talk about, go ahead if you want to show us something. Then I want to move this long-term.
Ask a question, then I'll ask your question. I'll answer. I'm digging through kind of like when I'm going through my watch list. There's very specific things I'm looking for. I'll talk about that here in a second when we're going through the trades.
Okay.
So there's
let's do that now. Let's go through that now. So for you guys that are maybe new, Mark sends out a watch list every day to people who are members of Delta Strike, which you can join Delta Strike today. We have a special offer. If you guys can actually post that, for those of you that are here, Delta Strike is normally $3,000. Look at this scary man on the screen while I try to talk about this.
That's Jason Voorhees.
Don't let this dissuade you. This person will not come and haunt you in your dreams if you join Delta Strike. Okay?
Yes.
But we have a very special limited time offer right now for Delta Strike. There's a button above you can click, or Christian, if you can post it, or we'll put it in the chat for you guys. You can actually join for 2 years for the price of one, and you can do this every day with Mark. So what he's about to show you after this scary man with the old hockey mask is his watch list, which he sends out every morning. Yes. So Mark basically does what we already looked at, all of the orders. He kind of filters it himself, and then he sends you what the best ones are. So you don't have to look at that scanner. You don't have to go through this. You basically will, after the fact, like, you get what he's already pre-filtered. So Mark, walk us through what you sent out this morning.
So I, at the top of my watch list, I like to kind of generate an AI image that I think best represents kind of what happened the previous day. And I got to tell you, I think that Jason Voorhees at the New York Stock Exchange is a pretty fair assessment, wouldn't you?
Yesterday was Grim Reaper Day, that's for sure.
It was definitely a bloodbath. But, I kind of broke down what's interesting about today is, we're getting the VIX move that we should have gotten yesterday. Mm-hmm. And markets are down, but we're not really down. We're not kind of down as much as we were yesterday. But we are getting some kind of follow through volatility, which is kind of what I was looking for. I'm liking what I'm seeing. But I kind of write up what my thoughts are on the market, and we talked about this yesterday, but for not everybody is able to attend live, and I want you to catch the major pieces of my kind of how I broke down the market. And the big piece, all right, Scott Bassett, the U.S. Secretary of the Treasury, was asked, why are these tariffs destroying the market? And he said the market has a Mag 7 problem, not a MAGA problem. And you know what? He's not wrong. He's not 100% right. There's definitely some tariffs are definitely not the market's friend.
Yeah.
Right?
What do you think? What do you think is true about that, though?
I mean, the Mag 7 sell-off started before
the correction,
the big push on these tariffs.
Yeah.
And you can actually see the pain in the market.
Yeah.
The top line is the Dow Jones, middle line is the S&P. We have the Qs and then MGK, which is the 90 largest stocks.
Yeah.
The more exposure you have to the top 8 names in the stock market, the more pain you're feeling.
There's a great chart that we'll send out to you guys after this today that basically shows also there is a cycle to the consolidation of money in the market into just a couple of stocks. Like what we've seen over the last few years with the Mag 7, Mag 8 is not irregular. That happens. It's a cycle that happens like every 10 or 15 years and it normally lasts 2 years. And then there's a correction and all of that consolidation, all of that money that was funneled into those names goes wider. So Mark, I would say that this might be the beginning of that. We may see from here on the money moving other places, I would say.
Well, yeah, I mean, the historically, all right, and I don't want to get too deep into this, Hannah, but there's 2 S&Ps. The one that everyone knows is the cap-weighted S&P. So the more valuable the company, the bigger the part of the ETF it is. And so what you've got is the S&P becomes very heavy, like 2 sectors. XLK, which is tech, XLY, which is consumer discretionary, that's got Amazon in it and Walmart, and then XLC, which is communications, which is Apple. So you've got NVIDIA and Microsoft in the XLK bucket, AVGOs in that bucket. You've got Apple and in the Apple and I think one of the other ones in the communications, and then consumer discretionary, you have Tesla and you've got Amazon. Then there's S&P equal weight, which says we're going to keep we want the 11 sectors that make up the S&P to be kind of be equally weighted across. And this might be the moment. Everybody's been asking this question, right? When are the other 493 going to perform?
Sure.
When are the other 493 going to perform? When are the other? We might be getting set up for that.
Yeah, put me in, coach. It's about to start. Mark, let's go through this watch list kind of quickly. Yes. If you want to just point out what you put in here, why this went sent out, and then do you want to go through these? Do you want to look at longer term?
There's 2 trades I want to look at specifically.
Okay, great. So let's get through this first, and then we can do that.
Yeah. So what you're looking at is, the same thing I've got here. All right. You've got date, time, the symbol, and then here's the option to trade. This is the June 20th, 2025. If it's not the current year, they will add the year in. So you see how this doesn't have a year?
Yep.
This one does. These are March of 2026. So they're buying the June 2025 $7 call in Sunrun, which got absolutely smoked. They paid 84 cents. But what made it kind of unique was that it was done tied to stock. I don't want to get too deep into it, but when you tie a stock into the option trade, it changes the entire dynamic. What they're looking for is huge movement out of the stock. It's either going to 0 or they're looking for 15.
Okay.
The other one that I think, and this might be this is the one that really caught my eye.
Okay.
Cleveland Cliffs. This is
CLF is the ticker for this one, you guys. Yes. Cleveland Cliffs, which I've never heard of. Why is this one, in your opinion, the most significant?
Because it's steel.
Steel.
Cleveland Cliffs. Yeah, Cleveland Cliffs may be working with Nippon to set up a deal with U.S. Steel, but the stock has just been absolutely abysmal.
Okay.
You want to see an ugly chart, Hannah?
Always.
Look at that thing. That is just nasty. In a year, it's gone from 23 to $6.80.
Pain. Okay, so
Terrible.
what it was this big money flow order? What did
Yeah,
you
they
see go
bought
in? Let's look at it.
a bank, a large fund. So we're talking
Yep.
JP Morgan, somebody along those lines, picked up 10,000 of the June 10 calls on a day the market was getting obliterated, and they did it at the end of the day. So notice that
Tried to sneak it in.
1550, they use military time here in live vol, so just be aware. 1550 is less than, there's 10 minutes to go in the day, and they're lifting the offer, paying 33 for 10,000 calls. And I'm saying to myself, okay, that's a leg.
Well,
They're
let's
sticking a leg out there.
let's look at it on today. Let's
Yeah.
look at it a little bit today.
So after I pull up the trades from yesterday, what I love to see is, hey, is anybody else did somebody look at that trade themselves
Yeah.
and say, that's a great idea. I want to do the same thing.
Right.
Now to open so far today, not a ton of extra, volume here today. So
yeah, these quantities are smaller. You'd like to see more.
Yeah. I mean, what I'd love to see is, hey, did somebody come in and scoop another 10,000 of these?
Right.
Or 15,000 of them?
Right.
Right now, not getting a lot. But, one of the things I talked about was that, the recovery trade, the rebound trade. This is a name that is on my list of names that I think could turn it around.
The stock in general, you like CLF.
Yeah. Well, I mean, if they can get the U.S. deal done, that stock's going to long-term be much, much higher.
Okay.
We're still kind of hanging around here, folks.
Yeah.
I do have an alert set up for the bottom, so don't worry. We won't miss it.
Since we've been talking, we've kind of dipped up and around, but we're kind of consolidating a little bit here sideways.
Mm-hmm. Yes, we are. And
talk to me, Mark, about long-term big money flow. So you said we might have a long-term opportunity, like out 6 to 9 months.
Today is the day. Today and the coming days are the days where you're looking for, those kind of trades.
Yeah.
When they're, stuff that goes out 3, 6, 9 months.
Yeah.
And is looking for the market to go up. And so again, we're going to have to go way down to start getting at a bunch of these equities because there's so much crazy index volume. Yeah, and ETF volume. And I'm looking to see, are there any kind of crazy calls that these traders think could make them some money? And my short answer is yes. Yes, there are. So like here is, speaking of commodities, the commodity space has just been absolutely trashed the last couple of days, right? Look at Alcoa. Look at, Cleveland Cliffs, FCX, any of those names. And I want to show you, now we're into kind of normal equity size, 10,000. Oil's been getting absolutely smoked. So what do we see? First big, huge trade that I catch, they're buying the Freeport-McMoRan copper 40, 45 call spread. So they're going long the 40 calls, selling the 45 calls, and they're paying 65 cents for that spread. Pays about 8 to 1. Then you go a little lower, and what do we see? Schlumberger. This is an oil services company. It's trading 35.60. They go out to June. They buy the 40 calls, sell the 42 calls. They pay 56 cents, pays out about almost 5 to 1. They're long above 40 up to about 42.5. So there is where we're starting to see we're starting to see a lot of these positions accumulate. KNX.
Yeah.
You see this one? That's May. It's a little shorter.
Yep.
Knight-Swift Transportation Holdings. All right. Another kind of bare bones economy trade. They bought the fund, whoever this big bank or big hedge fund is.
Yeah.
10,000 of the May 42.5 calls sold. 10,000 of the May 50s paid 119. Now, this is why we have to do our check, because I got a sinking suspicion on this one, Hannah.
Okay.
All right. Remember we talked about open interest.
Yeah.
All right. I want you to look at the open interest, which is right here. See, it says call open interest, COI.
Yep.
What is the open interest on the 50 calls?
11,453.
All right. 10,000 is a huge chunk of that, isn't it?
Yeah, it's almost the whole thing.
Yes. And then what is the open interest on the 42.5 calls?
82.
10,000.
How's that possible?
Well, because this is an opening trade. So when I open a trade, when I buy a call, I create open interest.
Yep.
When I sell to close, so when I take my trade off, I lower open interest.
Okay, so they already took that trade off, is what you're telling me.
So they're unwinding. So they lost on their 50 calls.
Okay.
And are rolling down to the 42.5s.
Okay, so they are not actually taking the longer term higher stance here. They're taking a lower. Yeah.
What they're saying is I ate a big sandwich made a crud, and I'm recentering my position so that if we do turn around, I can make money.
Okay. Yeah, but they're kind of leveraging downs because it was the 50s before and now it's the 42.
Because they lost really bad on those May 50s.
Right. Okay.
I can look back and actually tell you what they paid.
Yeah.
They paid about $1.10 for those, and they sold them at 6 cents.
So for everyone that's here today, as a member of Delta Strike, you would learn how to do this. Mark will show you this. He'll decode certain orders. He'll walk you through it. This is what it's saying. This is what it's not saying. But he also just gives you trade alerts based off of this. So it's kind of both things at once. If you want to see this, you want to learn how to do this, you want live vol also so that you can see these things. Like, we have a relationship with them. We can help you get this at a discount. Like, that's all a part of what we do. So if you love this charting, love big money flow, want to be able to do this yourself, give us a phone call. We can actually set that up for you so that you can have charts that look just like this. But if you don't want all the details and you just want the trade, we do that too. Yes. Those are both a piece of this service in Delta Strike.
So Hannah, because of that roll down, KNX is now completely off my I want to trade that.
Okay.
Do you want to know why?
Yes.
If you had a good friend, let's say, that was terrible at sports betting. Let's say this good friend maybe had, I don't know, red hair. And let's say this person was just absolutely awful at betting. Would you take their advice on a football game or a hockey game?
No.
You're a hockey fan.
No.
Right? No. So when we
I can lose my own money on my own. I don't need their help.
Right. We don't need this guy's help to trade because he was wrong, or she could have been a she. So when we see these roll downs, we don't want to piggyback. Now, what about on the other side? What if it was a roll up and that trader made a ton of money on the 42.5s and was rolling into the 50s? If you got a good friend that's a really good gambler, do you take their advice? You do. So when we see winners rolled up, we get excited. When we see losers rolled down, we go moving on.
Right.
And that's part of my verification process I do. So there's a complete process. It's spotting the order flow, making sure it is what we think it is, and then optimizing that trade and doing it better than they did.
I want to share with everyone, because we had some questions about this yesterday, and Mark may still peruse this for a longer term option that we may be trading while I show you guys this, but we had some questions yesterday about the overall track record of Delta Strike. So in the last 3 days, we've had 4 winners and 4 winners and 1 loser. I'll show you guys that in just a second. But I actually wanted to show you guys the full track record for Delta Strike over the last 6 months of trading, basically since the very end of June. So I'm going to show you guys this and scroll you through it so you can see the results.
If you want to swap screens, Christian.
Yep. So let me know you guys can see this okay. It should be coming on your screen. There you go. So here's the stock, entry price, close price, the gain or loss percent, and then the actual how long the trade was held. And then our standard here at Option Pit is out of $1,000 in the trade, what the return would have been. So here's the last few days. Like I said, 1 loss, 4 wins. Those of you that grabbed this amazing gap trade that we gave out for free on Wednesday and was overnight, so in one day, a 343% winner, congratulations. I'll kind of scroll through this and you guys can look, and as you have questions, put them in the chat and I'll answer them. The way that Mark trades these is exactly what we just walked you through. And at the bottom here, I have some summaries of the trades, and you'll see, like, are we going to hit a 342% winner every day? No. Are we going to hit a 225% winner every day? No. There are losing trades in here. Welcome to trading. This is how it works. But what I will highlight is, and I'll scroll to the bottom, over all of so since end of June, if you sum this up, if you would have put $1,000 in every trade, it's over $37,000 in profits. The money that you put in these is only tied up for on average 14 days. And you'll see that most often the positions are around a week. But we do have some that have stretched longer than that. But this is the potential profit. The cost of these trades is low. The average cost of these is $1.55 a contract. So if you just buy one, that's $155 a trade. This is our average return per trade, the dollar amount, and that is including the losses. So you're making a little over $200 per trade actually trading this strategy. So if you guys have questions about the Delta Strike track record, put them in the chat. I'm happy to answer those, but I want you guys to know the actual results. Here at Option Pit, we show you guys what the heck you're buying. We don't hide this stuff from you. We want you to know the results of the strategies we're showing you. So that's exactly what you're seeing here. So if you have any questions, pop them in the chat. We will answer them. But I want you guys to know the results of this strategy, because following and trading big money flow can be very lucrative. Look at that 37,000 number. Normally, these track records are posted on our website. We're redoing the website right now, so we're in the process of getting those re-added, but normally these will all be on the website. So this strategy is making money, and right now we have a 2-for-1 deal where you can get 2 years for the price of 1. So give us a phone call, use the number in the chat. Ted or Drew or Christian post it again so that everyone can see it. There's also an order form in there for you guys. And Mark, we will get back to looking at a trade in just a second, but any questions about the track record, put them in the chat. I'll send this out to you guys so you can see it. You can look at it yourself, do some of your own math on it. Mark has some 100% losses in here. He has an idea for how we're kind of going to limit those, and that's going to become a bigger piece of what we're doing. But overall, I mean, this is profitable. So it's not like it's killing the strategy. And we're going to start implementing, I think, a stop loss and some things like that to help cut down on some of those so they don't eat into our profits on these big money flow trades.
Yes. And a few other things. One of the things that's been great about Hannah coming on board is we're not allowed to just rest. Hannah never rests. We don't rest. She will, she forces us to constantly try and get better. And that was when we were going through this. She said too many 100% losses, and I said you're right. So we're always working to get better.
I don't have right now the percentage of winners versus losers, but I can find that. I'll do that calculation on here and I'll send it out to you.
I think I did. I calculated it yesterday. Here.
That's all right. No worries. I'll get it for you guys. No stress. We'll find it out. It's not that hard. I just have to go do it on this, but I wanted to show you guys this full track record. So, Mark, what are you seeing? What do you want to do? Do we have a long-term?
So I want to start by looking for some of our long-term trades. And Hannah, I do have that answer for you.
Okay, go ahead.
I believe. Oh no, that's the wrong track record. Sorry.
I'll do it later, Mark. Don't worry about it.
All right,
let's get to the trade.
All right. So one name I was looking at for a bottom, it's up 250, is Nike. And what I'm looking at that tells me maybe I shouldn't is notice all the top trades are puts. And
Hold on. I don't know why Leisha's in this room. Can we get Leisha out of here? Can we fix the stream? Sorry, Leisha. Thank you. This is the right stream. Sorry, I don't know what happened with Leisha. She shouldn't be in here right now. Can you guys hear us okay?
Yeah.
Can
Oh,
you hear us?
oh, she's running the wrong stream.
I know. I'm talking though. Mark and I are still here in Delta Strike. Can you guys hear us okay? All right. Go ahead, Mark. Keep going. Surprise
All right.
appearance from Leisha.
Well,
Keep
you
going.
know, everyone got a clean look at Leisha. Who doesn't want that? Right? Consider that one of your surprise bonuses. So I wanted to look at some of these big stocks and see if there's some names that have some intriguing order flow.
Okay.
You know, and I'm going to actually start with kind of some of the top 10 names.
Okay. No puts
And
out, you guys. This is where
all right,
we're trying to
so
get to a trade here.
yes, we're starting to look at Broadcom,
Okay.
which biggest trade today, the 150, you know,
AVGO. That's our first one.
AVGO.
AVGO.
Biggest trade today, puts, second biggest trades. There are some puts there. So there's on this one, they're still kind of worried about downside. Next up, and we'll go in kind of alphabetical order. I should have started with Apple, but Apple can be a little harder to read because there's so much activity. Believe it or not, Apple is so busy, a large contract is actually pretty rare. And what I want to point out is the biggest trade in Apple today is what do we lead off the top? Liquidating, taking money, monetizing your hedges. And the biggest trade, this is a big trade for Apple. Trader sold 9,000 June 195 puts at 1450 through the market. One, they wanted to get the trade done. And two, they are looking for, they're closing a big hedge. I'm looking and I don't see a roll down here. So that means they've pocketed this money and they're starting to wait, looking for a spot to potentially go long.
Okay, so AVGO, Apple, tentatively Apple. What else are you thinking here?
Apple's got a little hint of bullishness.
Okay.
All right. So the next on our list, and this one is one I keep waiting to see if they can find a floor.
Google, yeah.
Google. And again, you look at the order flow. What are they doing? Monetizing.
Yep.
Monetizing.
Yep.
All these trades are nicely in the money, and they close, and money, hedge funds, banks close them all. Pretty interesting. And then not a lot of call volume. So we're gonna keep going. I forgot Amazon. This is the other one that I think, if this tariff stuff gets under control, it is going to take off. And actually, we're starting to see we've got some betting around this in the near term and short term.
Okay.
All right. And long term. So we're starting to see in Amazon some pecking at some long-term positions.
They're a little up on the day. And honestly, they're a little up on the day. At least the last few minutes. Sorry.
So Amazon has had a big turnaround off the lows. So the low today for Amazon was 166.
Yeah.
And now it's popped back to 175.
Yeah. It's already recovered a bunch.
Yeah. And so this is one where I think there is some upside. And I'm going to go kind of out and look. In May, the 200 calls.
Yeah, I mean, the TikTok
times.
rumor also has to be affecting this. Like, the rumor is that they put in an offer on TikTok.
Yes. That would affect them. If they get TikTok, this thing is going to explode higher.
Yep.
Because TikTok is going to be sold at probably a much lower valuation because of the predicament they're in than they're actually worth if they were, say, another company. June 200 calls. They're building positions on there. July was looking to see if we've got some real action. No, in July you've got action on the 235 calls. Might be a close.
Right. So as Mark runs through this, he's looking for people basically betting that Amazon is going to go higher 6 months out, like a year out. He's looking for longer dated big bets from big money flow that are betting on Amazon going higher.
Yeah, and there is pretty active trading, even out to up to about 220 in Amazon out to September.
Which is good news for us.
Yes. And now here's the other fun part. Now, Hannah, you're not going to hit on this. Net using options on a day, Amazon premiums are exploding. They're net sellers of option premium, and they're net buyers of Amazon.
Right. So selling, guys, those two things that Mark just talked about are actually both betting that Amazon goes higher. So when someone is selling premium or they're just buying stock or just buying calls, they're all betting that the stock's going to go higher.
Yeah.
So understanding like the moves that are made in the market and what it means about where people think a stock's price is going to go is imperative to being a better trader. And if things like that, if you don't understand things like that, or you don't know what that means, join Delta Strike. Mark will teach you exactly what it means. And Delta Strike, if we have some people here who are Delta Strike members, which we should, please chime in the chat, those of you that are actually have learned how to read this. Because I bet there's some of you here that when Mark first started doing this was like, what the heck is going on right there? And now you're probably looking at big money flow and making some of your own trades too. So
all right,
talk to me in the chat about that experience. And Mark's going to walk us through this close up here. This is
So this is a fun secondary scan that I can get when I look at the stats. It's not my primary because it's only specific to the stock. But what they do is they actually, and this is a great area to look if you're a newer trader, they actually break down whether the order was leaning bullish or bearish.
Mm-hmm.
Hannah, this is the top 12 trades in Amazon.
Okay.
All right.
Yep.
Do you notice a trend on sentiment?
Calls, puts, calls.
No, look right.
Oh, bullish.
Here.
Yeah, I'm noticing bullish.
Yeah. Bull, neutral. And I can probably look and tell you, probably a buy. Probably a buy, but it's mid-market, so we're not going to no, that is not a buy. That's nothing. But you've got bullish, neutral. And this is a call spread for next week. And they bought it. And then you've got more bullish. And then you finally get a call sale of the July 235 calls. And you're saying, well, that's bearish. No, it's not. Because you've got these June 200s being bought. There is the reason why they're selling the July 235 calls is because they want to collect some premium. They own the stock. So they want to go all the way to 235 before they were willing to lose their stock. So
we've been here for a little over an hour, Mark.
Yes, I know we want to wrap it up.
No, it's okay. I want to sum up some things for everyone who's here, because there has been, even if we don't have a trade, there's been a bunch of value here today. We gave you guys a couple key levels, and I want to highlight those again in case you joined us halfway through. So right now, SPX is at, let's see what we're looking at right now. The market
SPX is 51.3325.
51.3325. So there's two key levels there that Mark pointed out. And if you haven't written these down, you should. 5119 to the downside. If we break through that, that's our support from back in, I think it was late August, September, Mark. If we break through the 5119, we could really see us go maybe even through 5,000. We don't think that's going to happen. But that is the downside number we're watching. The upside number we're watching for SPX is 5250. So if we were to get back to that level, Mark thinks we could rip even higher. So those are your two key levels that you should be watching. Now, Delta Strike is about tracking big money flow, finding these trades. We walked you through this a little bit today. A lot of the big money flow that we saw are people cashing in that insurance, monetizing their options. So there's not, money's coming out of the market still. It's not necessarily going back in yet. Now, it's going to go back into the market. It might not be till Monday that happens, but Mark is seeing some long-term buying. So not just people buying calls and puts right now that are going to expire in the next few weeks. He's looking further out, maybe through the summer, even into the fall. That's why we were highlighting looking at Amazon, Apple, Google, and AVGO.
Yeah.
So Mark, what do you want to do? Do you want to wait? Do you think that there's a long-term opportunity to go,
So
further out? What do you want to do? Do you
what
have an
I
idea
want
today?
to, what I want to do is, and we're threatening our low of the day yet again. I've got
Right.
that open.
We're right on it.
We're right on it. What I want to do is I'm going to start watching the July 200 calls.
Okay.
All right. Now, I don't mind buying those by the end of the day or Monday, but until we get resolution that we're either going to break lower and make
Right.
a run at Leasha's at the next level down,
Yep.
5,000, or we're going to actually get that bounce and really get over that 52.25. We're kind of at a spot where it's not always the best idea to jump in right now, but the July 200 calls, and I want to remind you where Amazon was on February 4th. This is 2 months ago. It was $245. And I want to remind you where Amazon was on my wife's birthday, March 25th. It was $205. In fact, it was over $200 all the way until, it touched $200 on the second.
So Mark, we just broke through 51.19. We're at 51.17. So it's kind of dancing around there a bit.
We're watching on the 5 minute.
Yep.
So on this 5 minute, we need to break and stay.
Yeah. You want to close
about 2 more minutes for this 5 minute to play out.
Okay. So what Mark's saying, you guys, is he's interested in the Amazon 200 calls, the July 200 calls, but he wants to wait and see what's going to happen with the market. So we did this a little bit yesterday. If there is an official trade, we'll post it in here and we'll send it out to you guys via email. But we need to see what happens as we kind of dance on this level. So it looks like it's maybe going to hold it. It's kind of trying to. So let's see what happens over the next 2 minutes. But if you guys haven't yet, give us a call. The Delta Strike offer that's 2 years for one, it is going to expire today. So if you are interested in doing this every day with Mark, we showed you the track record. There is daily live trading with this. So what we're doing right now, it's from 12 to 1 every single day. I saw a question in the chat from JoJo. She asked, what time is the class? It's from 12 to 1 every single day.
Yes.
Now, sometimes if you are working or you can't be there, Mark sends out all of the alerts. There are replays of the classes, so you don't have to be at every class every day.
No.
We're also doing some payment plans on the opportunity. So if 1,500 is still a lot for you and you want to break it up into a couple payments, give us a phone call. That number is 888-872-3301. Give us a phone call and we can work with you. Man, Mark, it's really trying to go under that. We're at 5113.
I know. We got about 1 second here.
All right, that was it.
Yeah. All right, let's get our confirmation. We're getting on the 1 minute. Man, we are going. Yeah, we may go lower here, guys. And this.
Also, if you need to write down this phone number, if you're stressed about the market right now, I get it. If you need to write down the phone number and just call us before the end of the day, that's fine. Our team will be around normally until 5 p.m. Sometimes I would try to call before 3 if you can.
That's Eastern time. Yes.
There's a phone number on the screen. I'll put it in the chat again for you guys. Write this down. If you can't call us right now, or you're sitting at your desk and you're supposed to be working and you're doing this, that's fine. But the phone number is right there. Write it down and just give us a call if you can before 3 p.m. today. I want you guys to get this 2-for-1 Delta Strike offer.
Yeah, absolutely. And so this is the level now where, I think you do not want to buy calls right now.
No. Yeah, we want to wait.
But so we're looking for names that have big puts that could potentially die. And yes, please call my team. They're going to take excellent care of you, right? Hannah holds us to it. Hannah holds a torch under our feet and cracks the whip. We're going to take very good care of you. We're going to have a lot of fun here. And
100%. Making money is fun. Making money is fun. Learning new things is fun. Being able to actually share in the community and talk about your trades is amazing.
Yes.
Those of you that are here and have stayed here for over an hour, thank you so much for being here. We originally started this 3-day live as just a celebration of Option Pit's 15th anniversary.
Yeah.
And I've been so excited by the response. We had, over 450 people here today. So I
Oh,
hope that
wow.
you guys got some good value out of this room. We have some key levels to watch. If a trade does materialize, let's say, we turn around on this, whatever, it doesn't look like it. Like we're almost to 5,100 now.
Yeah.
We're sitting on our hands. We want to
Yeah.
keep our money, not give it back.
Absolutely. This is one of those where you have to be patient and allow things to develop. One of the things you won't see here a lot is us trying to force a trade just to give you something. We want to trade with you, but we're not going to crush you by putting you in a bad idea, which is what would have happened yesterday if I'd have thrown you into that. What was I really close to looking at?
Netflix, I think.
It wasn't Netflix.
Mark, what's our next key level below 5119? So we're almost to 5100 now.
I mean, you'll get a little resistance around 50.75. Let me double check the futures. So you actually have to look at futures markets too.
Okay, let's look at it.
If we drop another 35 points, futures start to threaten 5,100. So, I mean, that's going to put a little resistance. And
at what point will we hit? Could we potentially hit a limit down here? No. It's got to go 7. I mean, that would be
it's 7%.
Right.
Would be, we'd be below 5,000 if we got that. We'd be basically attempting 5,000.
Okay.
We can hit that. I don't think we will, but we could. So one of the other things I was trying to find is, are there any stocks that still have real downside? And we definitely have gotten some nice selling here, but there are some names. I pointed out that Dow Jones Industrial Average. This thing goes to hell in a handbasket. It's going to roll over really, really fast. And some of the names that I think still have downside. So Alibaba's down $16. Okay. We're going to look at a different compare chart, and I'm going to tell you what market I think is the easiest sale. So this green line is the S&P 500.
Okay.
This is the China ETF.
Okay.
So it's the China ETF. So in the last 3 months, China's still up 8.3%, and our markets are down 14.5%. It doesn't make a lot of sense to me. I don't, and we've done well. We've hit on about 80% of our trades, jumping on being short China. I closed a Chinese automaker this morning. I closed an Alibaba trade this morning.
Yeah.
But I think, China looks, I'm going to add one more chart here. And because I think
Doug goes, hit him with another tariff.
Yeah. And I actually want to take another look at Alibaba, which is going to be this red line. So China's up 8%. Alibaba's still up 33% in the last 3 months. So basically, since the beginning of the year.
Yeah, it's
on
crazy.
The 6 month, they start to look a lot more similar. But it's still, even over 6 months, it's flat. It was down. It was underperforming, has now completely overperformed, and now we're getting that big turnaround. So if I'm looking to find puts, I'm looking at Alibaba, I'm looking at Pinduoduo, and I'm looking at FXI. And you're saying, Mark, Alibaba's down $15. Again, I already was short it using puts, which means I had a position that made money if it dropped.
Right.
Doesn't mean I'm done.
Right. So these could be some potential down, like stocks that we might want to play to the downside. Again, and you guys, we talk about this a lot. When you're trading, you want to swim with the tide. You don't want to fight it. So
Mm-hmm.
that's why we were waiting to look at the overall market trend. Now that we've kind of dipped below that piece, or we've dipped below 51.19 and we could go even lower, like the current switched, it's down now. So we may want to swim with it that way. Now it looks like we're kind of going across right now. We're back up at, what is this, 51.16 or 51.14 right now. So it's dancing around that point, but we want to swim with the tide, not against it.
Yeah, and I would point out how much volume is on the 100 puts here. They've bought 11,000 of the April 100 puts. Hannah, do you see the open interest here?
Yep, it about matches.
10,979.
Yep, we learned
They're
this.
opening. All right. And you've got like activity on the 113s. These are for April regulars, so these expire in 2 weeks.
Okay.
This is kind of our wheelhouse. Now, the option premiums are not cheap, but you can literally see them chasing. I want to go out to May. And again, you've got activity on the 100s opening, and you've got I have to look at the open interest or the open interest tomorrow. Sometimes when you have something like, a couple thousand, you have to kind of figure out what they do. You have to wait a day.
Yeah.
And patience is important. And in June, not a lot of reaches, and they're still buying protection. So if I'm, I said I was going to share the stock that I thought definitely is oversold and could go up, and I like the Amazon 200 calls, I'd be looking at buying June or July. And we've got the order flow, the big money flow to tell us we're right. On the downside, if I'm looking to have some downside protection, I would be buying the April 112 put. Now, for my traders that are actual option pit students, right, our traders that are here regularly that have been working with me, I would encourage them to look at spreading, but this will make money either way, whether you spread or outright buy. And for a stock to be down $15, and you'll sell me an option directly out of the money, and it only costs me about a third of what it's down, and I get 2 weeks to look at it, I will take that. I will take that.
So, Mark, let's just summarize that. You gave a lot of valuable information very, very quickly. Can you reiterate again, what is your long-term buy stock idea? What it is, and where you think it's going to go? And then let's talk again about that BABA put if you want to alert that as a longer-term stock trade.
Yeah. Well, that'd be a shorter-term stock
trade. Short-term.
So, yeah. So, again, the thesis is Amazon, and I'll make this really big so everyone can see it because I want everyone to be able to read it. That's not what I meant by I wanted it 200% bigger, but I guess I should have just played with the font. All right, AMZN. We're looking at the July. I want to make sure I get the date right. Because what happens, right now, there's only one July contract.
Right.
3 months ago, there was only one April contract. Now there's an April 4, an April 11, and April 25. So as we get closer to July, they start adding contracts. So we want to remember exactly what you're trading. So we're looking at the July 18th, 2025 expiration. That's when the contract expires.
Yeah.
So today is April. These expire in approximately 3.5 months. All right. And then we're looking at the $200 call. And out in July, that $200 call is going to cost me about $650. Here's what I'll tell you. I'm literally praying that we do completely roll over. All right.
Can you explain that a little bit?
I want to buy these Amazon calls.
Sure.
All right. So this is one of those things where, like, there is a level where I'll catch a falling knife. And if we completely roll over today, Monday morning would be when I'm going to catch that falling knife.
Right. So let's be extremely clear here. There's still like 350 people here, Mark. So this is not a time to mince words. Are
Right.
you buying this Amazon call right now? Yes or no?
No.
What are you waiting for before you would buy it?
I'm waiting to see if we get to that 52.50, then I'm going to buy it. I don't mind paying more when I know it's going to go up. All right? Or I'm waiting for the market to have an absolute bloodbath, and then I'm going to come in and scoop it up Monday morning.
Okay,
And pull up
the trade one more time. Pull up the trade one more time so everyone can see it. Pull it up one more time. Christian, I need this to go in the chat. I need it to go in the announcements. Let's be very clear here.
Yes. All right. I will put this in the announcements when I trade it. And all of you here, when I buy that, even though it's, we're not giving you free access on Monday.
Right. This is
I'm
the
going to
last day of
share
free access. This is the last day.
This is the last day of free access. But what I will do is share when I put this call on, because we're talking about it today. And then, I will update you when I make an adjustment. And I'll, from time to time, I'll shoot you an update from here or there. But the trade the second trade I'm doing, I'm looking at Alibaba. All right. So it's Alibaba.
Like Mark said, any of these, if he actually does the trade. So what we're showing you right now is what he's thinking. I want to make this so clear. I'm not mincing words. Trading for dummies. He's not putting these on right now. If he does, you'll see it below this video. There's a thing called the announcements. We post things down there. If he actually enters the trade, you will see it in the announcements. Both Delta Strike people and people that are here for free, you would see it in the announcement. So to be super clear. All right. Keep going.
Buying the 112 put for less than 5. All right. And this is one I may do. This is one I'm almost certainly going to be playing with today, because I think if the market rallies, that doesn't necessarily mean China goes up. And just because China drops doesn't mean the market keeps going. Like my spidey sense says we are coming to a head here.
Okay.
And we're either going to rip back half of the day, or Monday could be that generational buying opportunity that I've been looking for out of this.
We're over 51. We're over 5,100 now, Mark. It looks like it's trying to make a comeback, even though we went under 5,119. Yeah. We didn't actually cross 5,100. So it's recovered a bit.
We got that 5-minute below, and then look what they did here. We initially did get a sell. So that was an opportunity to, pick up a few points selling the market. We got all the way down to 5,100. I said, hey, we're going to run into a little resistance there, because we always do. Even numbers are always going to be resistance, and it's just a psychological thing. I don't know why. It's the same reason that, something like the volatility index or the S&P has strikes every $5. And if you look, all the activities on the zeros, so 5,000, 5,100, and on the 50s, 50, 50, 51, 50. People like trading even numbers.
Mark, you alluded a little bit to, depending on what happens today, we could have a generational buying opportunity on Monday.
Yeah.
For everyone who's here, I want to point you to 2 things on Monday that you should be doing. I know it's Friday afternoon. Give me 5 more minutes of your time, and Mark and I are going to let you guys go. There's 2 things that you should be doing on Monday. The first is, in our Option Pit Live free room, we host a show called the Ticker Highlight Show on Monday mornings at 10:30. Christian, if we have an add to calendar for that, let's post it in the chat now. If you guys want to continue, now Delta Strike free access is closed. This is the last day. You're not going to get this on a regular basis, but you can join us every Monday morning. We look for cheap options at 10:30 a.m. Eastern on Monday morning in the Ticker Highlight Show. If we have an add to calendar for that, Christian, let's post it. Okay, great. It's in the chat. Do you see that link? Click on it. It says add Ticker Highlight Show to your calendar. Click on that link and make sure this is on your calendar. You can join us Monday morning, and we will still be talking about this. You're not going to get Delta Strike on Monday morning unless you join the service, but you will get access to the Ticker Highlight Show. So I would use that. That's the first thing you have to do on Monday. The second thing is you should join Delta Strike today so that you can trade with us in Delta Strike on Monday. That's the second thing you should do. So again, we'll post the order form again. The phone number's going at the bottom of your screen, 888-872-3301. You guys, it's literally 2 years for the price of one. And Mark, Delta Strike is one of your oldest strategies. You've been trading and following big money flow for years. So this is not anything that's going to go anywhere in the next 2 years. And you have to understand, when you buy that 2-for-1 year deal, you lock that in. So you'll never pay more than that ever again. It's $1,500. And then in 2 years, if you made $1,500 again for 2 years, like, you lock that in. Yeah. That's an incredible discount. It's daily live trading.
Yeah. And, you know, normally our sessions are not 90 minutes. Don't worry. They're going to be half an hour, 45 minutes, an hour, right? A slow day, really slow days, they'll be a little shorter. I'll do some teaching. Really busy days, they'll be a little longer. I'll still do some teaching, but we're going to work our way through this market. But it is a lot of fun. We have a great time trading together, and it's a really good group of traders. So we would invite you to join us. So, you know, click that link, take advantage of the offer, and there you go right there.
You can also call our team. Like I said, if you were interested in a payment plan, we will do those with you guys here today. Here's the thing. We want you in strategies that are helping make you money. We are here to help you. We are literally here for you. Like, if Mark just wanted to go do this on his own time, he would just go do it on his own time and just trade and make money quietly alone. But that's not what we're doing here. Option Pit is a trading education company. We want to teach you how to do this and service you in a way that your financial advisor isn't going to. That's the point of this. We're going to help you make some money when they won't. So join Delta Strike. Mark, do you have any final words? If you get into these trades, we'll tell people today. It'll go in the announcements.
Absolutely. And I will send, when I buy this Amazon call, we will email it to you. And there's a strong possibility I add the Alibaba I am 90% certain I'm going to add this in. I'm just timing the trade.
Awesome.
Yeah.
Sounds great. So that will be posted in the announcements. We'll send it out via email if Mark actually gets in that trade. But there's still over 300 people here, 90 minutes in. Thank you guys so much for coming. I hope you learned something. Tell me if you learned something. I hope you guys learned something here today about the market, at the very least, how your financial advisor isn't helping you in ways that we can. This session today was free. We do this every once in a while. We do it every Monday at 10:30 a.m. So make sure that you're joining us. There's a lot that you can learn from these sessions. It's going to help you, whether you're retiring in 5 years or you're retiring in 40 years. There are things to learn here, and we are going to continue helping you. We've been here for 15 years, Option Pit. That's what we're celebrating, a 15-year anniversary. Thank you, Mark, for starting Option Pit so we can all be here. And like, we're here to service and help you and learn and make money for the next 15 years.
And, you know, subscribe if you're new to us. We've got a great YouTube channel. I put a video up just about every single day, kind of walking you through the market. Comes out after the close, gets you ready for the next day. Go to our YouTube channel, the Option Pit YouTube channel. But really, $1,500 for 2 years. We always have a 2-week refund policy, so you're not gonna, you know, there's no risk to this, right? You trade with you buy it today. You call us on the 16th or the 18th, the expiration of the on the 17th. Because the 18th, we got Good Friday.
Let's just say this. There's a 2-week money-back guarantee. You're not going to need to use it. How about that, okay?
I like that.
Join Delta Strike. Thank you guys for being here today with Mark and I. I look forward to seeing a lot of new faces in Delta Strike on Monday. And thank you guys for being here.
Yes.
You're the best. You're why
we love you guys. Hannah, thank you so much. Thank you for bringing us CRT. And folks,
you got it.
I'll see you Monday. So for Hannah J. Selner, I am Mark Sebastian. I am your only option. Have a great weekend.
Thank you, guys. Have a good day.